Hello and welcome to the trade setup. In this video we are looking at Oklo. It is time for another update, and today we'll be discussing the structure that managed to actually finally form a potential correction complete in the wave B. Although there are some warning signs, there are some structures that suggest possible continuation lower, and if we do get that, we should be prepared for even more severe and even larger correction within the wave B. But before we talk about those, I would like to go quickly through the larger time frame for any of you who might be new to provide the full context. Now, on this chart, we have been tracking this idea of a larger 5-wave move to the upside. This is what we are tracking. This, whether it fails or not, it will provide us signals, because failing to hold relevant areas of support will tell us that, wait, this structure is not going to work out. We should expect a much larger correction, and in fact this is exactly what happened on this chart, because initially we were also tracking a potential impulse on this area where this was still a 1-2 setup, but we were tracking a more direct third wave to the upside. Well, since we failed to hold the internal levels of support for a correction in a wave 4, and we broke below the $109 level basically, we failed to hold it, we had a high degree of confidence that this structure is highly expected to retrace much deeper into an area of support for a correction in a wave B instead, yeah, for the larger leading diagonal interpretation, not the impulse, the leading diagonal, in which case we started tracking this area for an ABC movement, this area of support between the $77.7 all the way down to the $29.7, and surely enough, it did prove right, because we did get into the area of support, and now we may actually have a bottom, although once again there are some structures that do or should worry us at the very least. And in fact I would like to go quickly through the extension. I want to provide you the extension, the ideal target for the wave 3, which I did also provide you previously, but yeah, for any of you who don't know, we are looking here at around the $480 level for the ideal target for the wave 3 if this structure is to succeed. Yeah, this remains pretty much unchanged. It is the 138.2% extension of the wave 1. It is all based on the previous structure, and this is the ideal target. Now, if we actually exceed it, it's not a problem, but we would need to at least get there to be able to track a follow-up wave 4 with a certainly decent degree of probabilities. Now, we can also track extensions for the wave C to the upside, assuming that we have bottomed within the wave B, because if we actually form another low, I would need to readjust the expectations, but this would be the ideal target, the 100% extension at around the $780 level. Now keep in mind, within the wave C we don't need to get there, but we also don't need to stop there, although it is certainly a level that the wave C is generally drawn towards. And now to bring up the issues we have been tracking. So firstly, we were looking for an ABC structure within this area. We did push quite nicely into the area of resistance, and we managed to extend lower afterwards, even within a 5-wave move to the downside, which all seems quite good. And now this 5-wave move to the downside is complete. We managed to break above the resistance levels. We managed to actually even break above the beginning of the wave C, which is a signal that this structure is already complete. Yeah, we don't, not even that we don't expect, we can't track continuation within this wave to the downside anymore. But the issue rather lies within the wave C itself, where, well, it isn't impossible to have been so weak. It is certainly very uncommon. Remember, I told you the ideal target was the 100% extension. The $46.5 level would have been the case here. Now, I also told you we don't need to get there, but we would like normally to get at least to the 78.6% extension, and if not that, at the very least the 61.8% extension. We didn't even get to that extension. We didn't even get to that level. And certainly we didn't get a large correction within wave B, and it's often common that when we don't get large corrections, we don't get significant extensions either, but to be so weak, it is certainly creating some warning signs and, yeah, making me consider other interpretations. What else could be possible within this area? Could it be maybe that this was an internal ABC within this area instead? Possibly. This could instead actually even form into a larger 1, 2, 3, 4th, and a 5th. Well, it is certainly an interesting count. It is certainly an interesting interpretation that we can track within this idea. And yeah, we would have the orange scenario that we will use for such an idea. But for that, I would actually still need to hold or to be held back by the area of resistance for such a correction in a wave 4, in a large leading diagonal, where that would be the 61.8% retracement, the $113.6 level. Now, please notice, where did we actually get rejected? It is perfectly the last level of resistance. So until we actually manage to get through that level, there is still a significant risk that we form another low within this area. And that isn't necessarily even the major concern. We were already considering a wave C to the downside, that where this could have been just a 1-2 setup and the third, fourth and the fifth could have still followed. That is not the concern. The concern is that after this would be built, well, we would have a 5-wave move to the downside. What do we always track? Well, it's a 5-wave move. Why? Because after a 3-wave correction in the opposite direction, we expect with high probability to continue in at least another 5-wave move in the initial trend direction. Well, in such a case, we would expect this to unfold over the next weeks, months maybe. Then we would expect a correction in a 3-wave pattern that could certainly take even a more significant amount of time. But then we would expect even another 5-wave move to the downside that could take a very long time before it is actually built. And it's not necessarily a problem from the perspective of the area of support, because it could very, very easily be built within this area. It wouldn't need to break the area of support, and in the end it would very likely still manage to push in a wave C to the upside. It would still have the same probabilities. Again, as long as we don't break below the $29.7 level, we don't necessarily consider this as a high probability interpretation, and I will still be tracking it, even if not within this idea of an ABC movement, because to be honest, even a double 1-2 1-2 setup could work out, where in that case the correction in wave 2 could take literally years and still work out in the end. We are not necessarily focusing too much on the time frame. We are focusing on the structures, on the levels, on the targets, on the retracements mostly. And since we are still below the last level of resistance, there is still a significant risk that this structure could extend lower. Now, in terms of resistance, we do also have the larger green area for a larger ABC movement to still unfold. But for now, it's not necessarily particularly strong. Within this interpretation, it's just a 3-wave move to the downside that can be tracked like this, ABC. It could be a wave B complete, and the wave C could unfold to the upside with no issues, which is why, since it isn't a pattern that is suggestive of further continuation lower, it's not necessarily an area that is very likely to reject us. It's not an area that will very likely take us to new lows that we should consider as a high risk resistance area. Now, certainly, even though we did get rejected at this level, we can't deny the structure that has managed to push into it. And unfortunately, it isn't necessarily a very clear pattern. It is within a very small time frame, and I can actually even make an impulse work out within this area. I can be tracking here potential 1-2 setup, third wave up, fourth wave down, and the fifth wave to be unfolding, but I would still prefer continuation higher, within an interpretation where I would be tracking a 5-wave move to the upside, which is what I would need for a reliable confirmation that this wave B has indeed found the bottom. I would still need at least one more high, and even then, it would be within such an unclear structure, we basically lack structure within this area, that it would still not be the greatest trade setup. We would need to actually build that on a larger time frame to have an actually reliable trade setup. But even then, even if we don't manage to build that 5-wave move to the upside, even if we build just something like an ABC structure, I would actually still very much need another high to be tracking this as a potential larger uptrend to be tracked within this area. And for this, I will be focusing specifically in this movement to the upside, in which I'm tracking a 5-wave pattern, where this would be a wave 1 up, a wave 2 down, third wave up, fourth wave down, and then a fifth wave. This could work out into an ABC within a third wave itself, but then I would still expect another fourth and another fifth. And we could allow a slightly deeper area of support for the idea of an extension within the wave 3 here, but it's not necessarily going to be too easy to make that work. And for this, I would really prefer that we return right now, that we reverse right now and actually extend higher, because within this correction, in this supposed wave 4, we have pushed into the last level of support, the 61.8% retracement at the $101 level. And yeah, we did actually even break below it briefly. Now, it's not a sustained break just yet, but I do see a lot of weakness. I don't see a pattern. I only see basically a 3-wave pattern to the upside. It isn't suggesting to me that this is going to succeed. And yeah, if it fails, again, an ABC structure could still work out, but if even the 78.6% retracement fails, well, I would be prepared for possibly the 5th wave to have already started to the downside. And at this point, I don't yet have a clear 5-wave move to the downside that has managed to build yet, but one could build, and it would be rather suggestive of more likely continuation within the orange scenario instead. And yeah, if we actually fail to hold this area, the $97.9 level basically, we could theoretically be tracking a larger area of support for, who knows, maybe even a 5-wave move to the upside within this area that we could theoretically maybe track, but it would not be a reliable trade setup for me. Yeah, we clearly lack structure within this movement, and I would be highly concerned to be looking for a position within this area. And yeah, I would be rather worried that this structure may very easily extend in the 5th wave in the orange interpretation. And again, it is close to breaking the orange scenario. We already did touch above the 61.8% retracement, but we did not break it. We did not make a sustained break above it, and that is what we need. And for now, these are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.